this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down the barriers from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. We have one of our favorite CEOs returning, which I think says something about the Equity Mates pool. You know, once they come back.
That is right. Our goal here at Equity Mates is to make markets as accessible as possible, and also to give companies the opportunity to speak directly to retail investors, because for far too long, that direct contact with management team we feel has been too difficult. And we're going to try a bit of a new format today, and that is to do a bit of a retail investor earnings call. Ren, for a while, well, up until now, this is potentially a world first. Earnings calls have always been with analysts asking the questions, but we are lucky enough to have an ASX listed CEO with us to answer the retail investor questions for his company. So it is our absolute pleasure to welcome back to Equity Mates, Larry Diamond, CEO and co-founder of Zip. Larry, welcome.
Hey guys, good to be back, and looking forward to chatting to you, Bryce and Ren.
So Larry, today we really want to take the opportunity to get an update on what's happening at Zip. We've had so many questions come through from the community, not only on business update, but the new brand, share price and other business activities. So let's treat this as a bit of an earnings call, and we're going to just fire some questions at you and leave it open to you. How's that sound?
Fire away, as they say.
So to start, can you give us an update on the business? Where is Zip at after Q4 FY21?
Yeah, so we put out our quarterly release for the June quarter, which is Q4 of financial 21, end of another year, a crazy year, I think, for everyone out there. And I think if we kind of go through a few of the factors, we'll look at financials, and then we'll also look at some of the strategic goals that we set. In general, when you look at our critical financial metrics, we look at transaction volume. That's a big driver of growth. We look at revenue. We look at transactions, customers, and merchants, and of course, unit economics. So I think if you look at a lot of the metrics, really pleasing results. Revenue, we generated $130 million for the quarter, up 100% year on year, and that's run rating just over $530 million a year, which is just a great number to see. We probably, when we started Zip, we would have dreamed for $300,000 to see $530 million annualized is pretty awesome. Transaction volume, we did 1.8 billion for the quarter, which was up again over 100% year on year, and pleasingly, the transactions, which actually shows how engaged customers are, was up well over 200%. Okay, so that's a metric that we look at very closely. It's not just the transactions, but actually customers and the number of transactions per customer, because the more customers use you, the more important that we are to them, and the greater chance we have of building a great relationship. We're now annualizing at over $7 billion in transaction volume across the globe, and customers were up to 7.3 million, and merchants up to 50,000. So I think when you look at the financial metrics, pretty good. I think we want to be a growth business, and that is how do we drive triple digit growth year over year, right? That's sort of how we go forward. And then, revenue wise, 7% as a percentage of TTV. So we look at that metric very, very closely. And we also look at gross profit margin divided by TTV, which is our net transaction margin, which we will show at the end of the financial year. So I think if you look at the financial numbers, a pretty good scorecard, right? And we give ourselves a little pat on the back. In terms of regions, a year ago, we were really just in Australia and a bit of a New Zealand business. When you fast forward today, when you integrate with Zip, we're now in 12 markets. So it's just quite incredible to look at the growth. Now, of course, most of the story is about the US, which has been a fantastic story for us. The growth there has been phenomenal. The founders are doing an amazing job, continuing to drive growth. We just had our budget review today with our CFO and financial director, and we looked at just what we had budgeted and where we went, and the guys smashed it out of the park. So I think that's just good validation. When we were sitting here a year ago and we set the budgets, they've just blown straight through them. So I think it just shows the the opportunity. UK, we went into a little bit of a hiatus last year because of COVID, right? We kind of shrunk a lot of our investment. We shrunk our expansion as we try to preserve the ship and faced into the uncertainty of COVID. So we kind of put that business really on ice, and our leader there, Anthony, really had a very small team and just thinking about the future. This year, we've really rebooted that business, and we're really excited about that. They're now on the scoreboard, so small numbers, but the pipeline and opportunity that we see there is significant. Also, we've rolled out we've started processing payments in Mexico, in Canada, and so what you're seeing is our global technology stack is actually the QuadPay stack, right, which is a different technology stack to our Australian business. And that is just built amazingly well in helping us drive organically into new markets or enter markets through financial services partners or kind of revenue. So I think that's been great. On the merchant side, the US has done a fantastic job, and globally we've brought on names like Boohoo, JD Sports, Microsoft, brands that we would have dreamed when we set up with our investor pitch for 170 grand 8 years ago. I'm sure we would have had a logo like Microsoft on there, right? So it's just awesome to see them come to life. And now we can show up as a single unified payment brand to global merchants. So expect us to cut more of those deals. Here in Australia, JB Hi-Fi, that logo was definitely on my original pitch deck. And so again, it's kind of warm and fuzzy to have them on board. And then internally, our Zipsters, right? For us, our future is not just, it's two sides of the coin. It's how well we're doing outside telling our story, but it's how are our troops feeling. And the culture inside Zip is going really great. They're handling the pace, they're very resilient, and we focus a lot on engagement. And it was great to use our platform to talk about new policies and really take a lead forward there. So employee engagement is another massive metric that we track. And we've done really, really well there. So huge investment in people. So, I think by and large, we're actually quite happy with the results. Obviously the share market had a little bit of a different view, but I think if you look at those internal metrics, really good scorecard.
Yeah, great.
So Larry, as Bryce said, we've gone out to the Equity Mates community. We've looked online to crowdsource a number of questions. We'll get some of our own in as well. Don't you worry.
I'm sure you will.
We'll start with a question from Morgan from the Equity Mates community. You mentioned there you're in the US, the UK. You've started processing payments in Mexico and Canada. Morgan wants to know, where is Zip going next? With so many countries already with Zip, are there any other countries in the pipeline?
Good question, Morgan. For us, what's really important is, the market is valuing the business a lot today on the success of markets like the US, Australia, and New Zealand, and increasingly the UK. So I think the first call out is we have to drive growth in those markets. Otherwise, the present value of those cash flows, if you like, is more weighted towards those markets. So we have to nail that brief. So I want to just keep that first and foremost. US, Australia, and UK really have to nail. Now, we are starting to place flags in other markets, right? Because we believe that payment companies have to be global in nature, right? The technology behind it has to be global in nature. When retailers integrate, they want to deal with one payment provider, and increasingly customers, they want to have affinity with one wallet as they move from country to country. So what we really want to do now is try and bed down a lot of the markets and actually prove to you guys that we can drive growth in Mexico. We can drive growth in the Middle East. And so I think that's really important. The cost to enter a market is very low. And so we're not going to invest huge amounts of capital spinning up the similar cost base, let's say, in Western Europe. So Western Europe is a $1.1 trillion e-commerce market. We have to be in Europe, and you've seen us by a great team over in Central and Eastern Europe, Twisto. So we have to be in Europe, but we're not going to spin up a huge cost base like what we've done in Australia and the US. We have to be much, much smarter. So we've got the technology. We have to enter with partnerships, right? Because the technology should just, once we get the licensing, the regulatory and all those requirements, hopefully it's really just a sales and marketing front, and our platform can deliver the products and services. So I think we've got a good footprint today. We would like to see, as I say, a bit more in Western Europe. I think that's an important place for us to play. But we don't want to put huge cost into that equation. So we have to leverage the efficiencies in the platform. That's why I spoke about earlier, the QuadPay stack is a fantastic stack, and it's just proven already to you guys. The fact that we can just turn on in Canada, We've gone live in Mexico. We didn't make a huge song and dance. We just opened it up, and we're now going to start rolling. So that's what we want to bring to the global expansion story.
Larry, this one comes from Cody, and he's interested to know how you see Zip's competitive advantage versus the other buy now, pay later players. And given the latest announcements from PayPal, which we already knew was coming, but also Apple, how do you see yourselves against those and are planning accordingly?
Every day we hear about another pay. Next week we're going to hear Bryce Pay. I've heard rumors, right? And so I think the good news is, when we started this 8 years ago, it was a relatively buy now pay later was relatively unknown. So I think the great news is the awareness is just going bananas, and in fact, it's bringing the future forward. Right? This idea that you're getting to the total addressable market, the TAM, is bigger today because of these players entering. So I actually see that as a positive. Now, competition, if we were fearful of competition, we never would have taken our first step, right? I mean, I remember my mother telling me, how are you going to do it? There's the banks, there's PayPal, you're going to need billions of dollars of capital, you're raising 100 grand. So I think what you see in our business is fearless attitude, but you do have to play the long game, and that's what you've seen here today. So we are fearless. We think competition is healthy, and a rising tide is lifting all boats and increasing the total addressable market. Now, what that's doing, I guarantee you, because Apple, and this is all speculation, we haven't seen Apple or Goldman's come out formally and actually say anything. But if you were to assume it's true, what are all the other technology businesses and all the other financial services firms going to do? They're going to get a bit of FOMO, right? They're going to get a bit of FOMO. They're going to go into their boardrooms and they're going to start thinking, do we buy? Do we build? Do we innovate? Do we partner? And so I think we show ourselves to be amazing partners. We've partnered with merchants. We've partnered with payment platforms. We've even integrated into banks before. So if we can become the Stripe of BNPL, have amazing technology and API infrastructure to enable BNPL everywhere, I think we can actually be part of this rising tide. And so we do back ourselves to cut transformational deals and inject ourselves into the ecosystem of payments, not just at web checkout, native apps. We can plug into financial services businesses so that they can offer BNPL to their customers. So I think that's on the competition front. I think where we are different is our DNA is installments. It's quite different to a business that's just rolling out a feature or plugging a hole here or plugging demand. So when you think about Zip, we want you to think about zipping a transaction. And that's whether it's a $200 and you pay it back in a couple of weeks, whether it's $2,000 and you pay it back in 6 months or 12 months, or whether you're a small business paying installments, you want to zip a transaction. And I think when you look at that versus the overall peers, that is very, very different. Okay, so being able to zip a transaction everywhere and focus on that entirely means whether it's closed loop, open loop, you can spin a transaction. The second big differentiator is that we are one of the very few global BNPL players. So we are investing heavily in getting licenses, regulatory, and covering all that stuff in these markets, so that our promise to the merchant is integrate once, and behind the curtain, we'll do all that hard stuff. We'll go into difficult markets. We'll go and get licenses. We'll handle the conversion and the economics. And I think thirdly, we make money both from merchants and also customers. And what that means is we're happy to charge customers if it's fair, transparent, easy to understand. Customers are happy to pay for value. So it means we can actually play in any category. Some categories have very low gross profit margins. They can't sustain very high merchant fees. Some categories have very high gross profit margins and can handle high merchant fees. So our ability to play in all categories will mean we can actually be part of all payments. So it is noisy. Yes, it is noisy, and analysts do get scared about that. We get invigorated.
Larry, you mentioned there Zip Biz, which when we look online, there's a lot of excitement around that, I guess, that element of your business. Some sentiment online thinks that Afterpay is going after consumers and Zip is going after businesses. So I guess the first question is that accurate? And then the second question is, how do you think about the competitors in the business space, players like Square and the like?
If you just look at the differences between us, I mean, we're all about the consumer. And so if you're buying, a dress for $200, paying that back in 8 weeks is reasonable because, it's time to get a new dress after 8 weeks. If I get the furniture or the mobile phone, I can't pay it back in 8 weeks. It's like a mortgage, and I need more affordable time, 6, 12, 24. And so we play right across that spectrum, right? Afterpay is very focused on their pay in full. And so we've put $4 billion in long-term consumer finance through our platform. So we have heritage in. So that's why we say Zip should be able to split any transaction. Know us for that. And if I look at the peer set here, it's pretty good competition, right? So I think we're in a good place there. But again, a small business for us in a way, particularly tradies and micro proprietors, the credit risk is almost like you're taking credit risk on the principal, on the person. It's very different to a big capital loan. You're looking at the company's balance sheet. And so we see small business as a huge opportunity. We integrated into Facebook, so a small business can effectively buy advertising, acquire a customer pays, and then sort of pays us back. So we kind of see that as our frontier. Now, we are going to bump into competitors like Square, the banks, and so forth. I think Australia, we are uniquely placed in building out the ecosystem, right? This idea, imagine this world where a customer opens up their Zip wallet, goes to a merchant that's offering Zip. Now, that customer could be a customer getting a set of AirPods, could be a customer going and getting a television, right? So short and long installments. It could be a small business getting computers for their business. Or it could be a customer who says, you know what, I don't want to pay on credit. I want to pay now from my bank account. That then goes into the merchant who's offering Zip. All that money gets settled into a Zip merchant account, and now that business can now shop online using their Zip wallet, either from funds that we've issued as credit or from funds that we've lent them. And so you can kind of see this amazing ecosystem. Now, it's going to take a while to get there, but I think in Australia, we've got a really red hot chance of building that out. In other markets, we take a bit of a different approach, going early with the consumer.
To close out sort of business update on the reporting side, this one's from Colin, and he says, when does Zip project to be net profit after tax positive, and how do you intend to achieve this given your margin and cost structure that make it seem quite challenging?
A good question, Colin, right? At the end of the day, we have to deliver value for shareholders, and value to shareholders ultimately, the most common method that people use is forecast out cash flows over 5, 7, or 10 years at a terminal value and discount that back to the present value, and then divide that by the number of shares. Now, you're going to have to make a number of guesses, right? And this is what the analysts do and everyone does. Well, what actually is going to be the total volume that Zip's going to generate over the next 10 years? Also, what are the margins that Zip's going to generate over that volume? And what's the cost structure to support that business, right? And you got to make a call. I think what we've proven here in Australia is, we've been cash flow break even for 10 quarters. So we show that we can control our costs. But we are investing in growth. Now, to do that, it's important as you invest in growth it's not just growth at all costs. So you have to be able to see the key metrics and then extrapolate out and then go, okay, based on those assumptions, do we think that the business kind of gets there? So what you need to look at is, what is our revenue as a percentage of TTV. Now, revenue, as you remember earlier, comes from both customer fee and merchant fee. And as I mentioned earlier, it's not just merchant. We drive a lot of income from fair and easy to understand customer fees, which arguably are less at risk from competition. So we actually we believe we have quite a robust revenue profile. But you have to look at revenue divided by TTV. Then we look at our costs being cost of debt, bad debts, and processing costs to get to a gross profit. Yep, and that's what also people call a net transaction margin. And so I'd encourage you to look at those metrics. And if those metrics suggest, which we believe they do, good unit economics, as you pump more volume through that, you'll start to get the operating leverage coming through gross profit and funding the cost base. So the cost base, so that's sort of the view that we're taking, all right? And we are driving to net profit, but it just is being pushed out a few years because the opportunity before us is so big. But we're starting to get the synergies through the cost base. And as I mentioned to you earlier, us launching in Canada and Mexico If we took the original approach, it would have cost us huge amounts of money to build the product, the technology, the kind of infrastructure. So we are very mindful of profitability because that's what drives present value of cash flow. But if you look at, revenue as a percentage of TTV was 7%. Net transaction margin, we haven't released the latest figures to market. We'll do that soon. But if you look at our last half year, you'll see that. And the other point is that the capital is recycling. Our capital used to recycle every 6 to 12 months. Then it was 6 months. Now it's every 3 months. So we're also getting a much higher return on capital, which then means that we need less capital to drive that revenue. So if you look at those charts that we've shown in our recent results, that shows you that as long as we keep the net transaction margin looking healthy and we drive fast return on capital and we don't let our costs get ahead of ourselves in the fixed cost as a percentage of those metrics, then it's just backing us to actually deliver on those goals.
So Larry, let's move on from business update and talk about brand. We've had a lot of questions come in regarding this. So let's start at the top. I think the big question is the rebrand. What was the decision behind that?
Yeah, good question. So we believe, as I've touched on earlier, that we've had brands that have been designed for local markets, whether it's Zip in Australia, QuadPay in the US, and so we are moving from local regional markets to really becoming a global payments brand. And so investing in a single brand, a brand that customers and merchants can trust. Trust is one of the most important factors in brand affinity, particularly in financial services, and really show up in all markets as a single unified front. So that really was the genesis, and not really controversial at all, was always in the plan. QuadPay itself was an incredible brand to support the growth of Pay in 4 in the category. It literally means Pay in 4. And has been really a fantastic story there. As Zip came about and we looked at the future, as I sort of touched on earlier, zipping a transaction that's Pay in 4, it's Pay in 6, and sort of Pay in 12. So we also needed a brand that can flex and scale with us, because we're not going to be just known for Pay in 4, but we are going to be known for moving at zip speed, which is what all the whole team in the US has been incredible. Like, they innovate, they hustle, they move quickly, and it just resonates incredibly well. So we needed a brand that can really extend with us everywhere. And when merchants integrate, they don't see Twisto in Europe or Spotty in the Middle East. They see Zip. And what Zip means is integrate once, and behind the curtain, we'll handle all the complexity, regulatory, licensing, and customers equally. If they're doing cross-border, Mexico into Canada, Mexico into the US, Canada, you need a single brand. So I think that was really uncontroversial. It's really the timing, and for us, we felt this was the best time. We got a lot of great global retail relationships, and as we take them global, this was a really important part of that equation. Now, back here in Australia, I think there's definitely been a little bit more shock, right? Moving from, even for me, I wear this brand every day on my shirt, and it's a very visually different logo, and it does take a fearless brand to change. But if you look at the brand itself, driving purpose, driving mission, putting merchants and customers at the center of all that we do is really important. And brands that have good mission, good why, do succeed over time. And I think one of the other elements is when you see Zip, Zip, not a confusing logo mark. If you remember, when we go overseas, we're going to be dancing with elephants. We're going to be competing with pretty strong brands out there. We need something unique. We need something that is distinct. When you see it, you know it. And really, this was a great design. The feedback from merchants has been really positive because they see how it can actually work together. And we'll be rolling out, later next month with the brand across all the markets. And we are pretty excited about it, mostly because we get new merch.
Everyone loves merch. That's right. So, Larry, before we move on to share price and other bits and pieces about the business, we will just take a quick break to hear from our sponsors. So in terms of share price, Larry, there's a lot of noise around the short-term price movement. You guys reported a pretty amazing result, yet saw a drop in share price, and many of our audience are invested in Zip. So how many times, I guess, do you spend focused on today's share price versus the sort of tomorrow's business?
Yeah, and look, I empathize with everyone out there because I am also a shareholder, right? So I feel I ride the ups, I ride the downs, but I'm still here. I think that's the important. And so are the rest of the Zipsters equally excited about the opportunity. Of course, though, look, it's not great to see people having bought at higher prices and then suffering where it is today. But I think as long as we are still confident, we're still passionate, and we believe that the opportunity before us is enormous, then we must go. And so, I mean, ultimately, vindication will be in the results, right? There's a lot of we can talk about some of the other short-term volatility vectors that might be playing out here. But as long as we focus on the long term, which is around that transaction volume, the revenue that comes off it, the gross profit, and the cash net profit, then we get to a great result. So we do try and focus on the long-term fundamentals, but it is important to keep markets informed and ensure that there is no confusion out there. And so we are spending a lot more time, I would say, with the feedback that we're hearing, from the Equity Mates community, from Hot Copper, and just in general. We are taking that very seriously, and so we're doing a lot of work internally on a couple of fronts. One is we are in market for an investor relations head. Pete and myself have done a lot of investor relations, but actually bolstering our investor relations capability. We're also looking at how we talk to you guys, the retail investors. Some people call us the punters, right? We are doing a lot of work around how we can talk to you guys, how we can communicate and create more of a dialogue, because we do think there is asymmetry. And it's important for us to democratize access, not just to the instos, the big end of town who get meetings in rooms with rich mahogany and lovely Evian water.
We've had a meeting in a room with rich mahogany with you, Larry.
There was no Evian. It was just tap water, buddy. And we're all about putting people at the center. It's not just customers and merchants, it's investors. And I think we're incredibly fortunate that we've got such a huge retail base. And I think if we can just work better together. In America, we see there is the GameStop and Reddit phenomenon, but that's at the other end of town. But this world where consumers and investors can actually be the same thing. People can sign up to our products, they can invest in our business, and I think therefore there's a lot of alignment there. But yeah, we've got to do a better job at talking to our retailers, retail investors. There's well over 100,000 of you guys, right? Which is just awesome, and so we got to do a better job. And we are listening.
So, Larry, you mentioned there some other short-term volatility vectors, and one that comes up a little bit online is around shorts and the volume of short interest in Zip. How are you thinking about the short volume, and is there anything Zip management's doing to, I guess, address this?
I think we've obviously seen the short volume. It's always been a little bit high for our liking, just kind of generally relative to our peers. And then definitely over the last few months, we've seen a huge uptick. We were at one stage, on shortman.com, we were 1 or 2, and it's ticked over 10%, which for us personally, as our team and long-term investors, we are not very happy about. And we're actually trying to understand exactly what is going on here. We are talking to some of our advisors to understand where it's coming from. There's nothing like the retail army fighting the hedge funds. We, could be one way to blow them away. But also, just some additional information. When we did the $400 million unsecured convertible note earlier this year, Bank of America did what they call a delta hedge, which is for some of the instos coming in, they wanted to protect themselves on the share price, and so there was some volume that came into that delta hedge, nowhere near the volume that we're looking at today, but that definitely is a factor. It's also why you see Bank of America moving sometimes on the substantial share notice. So there was a little bit of shorting associated with that. Is it bad? Is it good? It was actually a really important part of the structure, which ultimately meant that instead of raising capital at prices of today, the strike price is well over $12. So that's actually a real positive for shareholders, saying to you guys, we're not going to raise money at today's prices. We're going to raise money at tomorrow's prices of $12 plus. So it was a piece, but we're still trying to get to the bottom of exactly what's going on here. Obviously, there are some institutions trying to take a bet against Zip, bet against us, and we take that personally, right? Because it's basically a bet against us. It's a bet against all the Zipsters here working their ass off, trying to do the impossible. So we're going to hold firm.
Nice. I guess in terms of the share price at the moment, down from where it was at February highs this year, the risk is the need to tap capital markets at such a low price. How do you think about Zip's need to raise further capital? What's the balance sheet like at the moment?
We only raised that $400 million a few months ago, and really it was spawned from discussions we're also having at sort of board level, talking about our aspirations and growth opportunities around the world, particularly in the US, but also around the world. It's actually why we went bigger than what we would have expected. We've been generating, as we sort of touched on earlier, good cash flow break even over here in Australia, and this gives us really growth capital to kind of go. So balance sheet looking very good. It's covering us for ultimately, it's really our choice how hard we want to go. And so what this did was give us a lot more flexibility in how we grow. So I'd say the balance sheet is in a very good place. The coffers are full, and that should cover us for the good journey. And so we did that as well ahead of. We were having discussions as to when is the best time to go and what is the right structure to go with. And earlier this year, we took the view that the unsecured convertible note market was really competitive, and this ability to get very low cost, 0% coupon, get raising capital at future stock prices, and going early and going big was the move. And that's exactly why we did that, because we don't really want to be subject to short-term share price volatility. We need to kind of have the coffers filled so we can focus on execution.
Yeah, Larry, I think we've grilled you enough about the share price here. I think I want to, as we move on to other business, I think it's worth noting that Bryce and I both are long-term investors, and every expert we speak to, talks about the benefits of long-term investing. And I think, Zip obviously had a massive run up post-COVID, hit that February high, but you just have to zoom out on the stock price, and a lot of investors have done incredibly well. So I think it's good you're focusing on the long-term business and investing for growth. But look, we're not here to compliment you. We're here to ask you all the hard questions. So we'll get into some other business. So one thing we saw a little bit online was around the new partnerships that Zip's announcing, and an area of criticism is around perhaps a lack of communication around some of these partnerships. Do you think that's fair? How do you think about that criticism?
Yeah, look, I think it's fair. I think we need to understand when do we need to speak, and how do we speak, right? So there's obviously a lot of news flow that's happening every day at Zip. New merchants are rolling out on the platform every day, and you can see that publicly. When we went live with Boohoo or Microsoft or JD or JB Hi-Fi. Now, we report quarterly to the stock market. It's not an obligation anymore. We passed that obligation a couple of years ago. So we're doing that though to keep the investor community updated, right? And where we bundle it all together, and every 90 days, which is not that long, we basically summarize it all. Yeah. So in the most recent one, we heard about the likes of Microsoft. We heard about the Stripe and Adyen partnerships. If it's big and meaningful and we think it warrants its own, then we will put out a specific release. We've done that in the past with regards to maybe JB Hi-Fi or Amazon, and we'll continue to do that. But I do think that, and this is kind of what I was touching on earlier today, there might be better ways for us to update the retail investor community who it might be hard to see which merchants went live, what products rolled out, but it's not necessarily market sensitive, right? Because ASX also slaps you on the wrist if you try and push out news flow that's not market sensitive and you're using it almost as your news channel, which we do get away with. But we do want to see if we can create a better communication dialogue, right? And so we're actually talking about that internally. Some companies write newsletters, videos, whatever it is, but we are trying to see if we can provide better updates. In the old days, before the internet, Westfield used to send out newsletters every second month to their retail shareholders because they were so excited by the brand and what was happening. Not necessarily because it's market sensitive, but to give people a bit more of an inside scoop as to how things are going. So all I would say today is we are internally thinking about how we do a better job. If it is material and sensitive, we will include it. Otherwise, it will be in our 90-day update, which is a bit of work, but we're happy to continue doing that, right? Because I think it's great to show how things are going. You could argue it's too short-term focused. And in fact, when people look at the US, they legally have to report quarterly, and that can change, right? It can change how businesses think about running the business. If you're focused on quarter-on-quarter growth, look at Amazon. They went for real long-term value creation at the other end of the spectrum.
So, Larry, right now there's a Senate inquiry in Australia into mobile payments and digital wallets, and it feels like there's a lot of, I guess, fingers being pointed might be the way to phrase it. Your co-founder, Peter Gray, criticized the banks for anti-competitive conduct. The banks turned around and criticized Apple for anti-competitive conduct. So there's a lot of noise coming out of that inquiry. Given we've got you on the show, can you explain the concern that Peter raised in the inquiry?
It's always good to see fintech banks and technology companies all coming out and having a say. Always good. You know what Pete was touching on. One of the number one reasons when customers close accounts. So we track everything. We have our customer service team actually working really closely with our product teams every single day. So if we hear things and see reason codes, we try and get to the root cause and then understand how we can fix it. And one of the top reason codes for closing a Zip account is because of the banks. Right, that's just fact. And so what Pete's touching on is there's obviously conversations going on there when they are applying for a mortgage where we feel that they are, do you call it third line forcing? They're basically getting them to close their Zip accounts. And if you're only paying $40 a month, surely that is affordable when you're applying for mortgages and doing your responsibility checks. So we think there's something funny going on there. I wouldn't hazard whether they might be closing the Zip account, offering a mortgage, and then giving them a credit card or paying for product. I'm pretty sure that's happening too. So that's what we're calling out. We feel that's unfair, and that's what Pete was sort of touching on. And then I think we saw that play out a little bit in the press.
Fair call. Larry, we've seen online the rumor mill in full flight when it comes to takeover, be it talk of Klarna and also Bank of America buying Zip. So given that we have got you right now, are you able to address these concerns or rumors?
Yeah, sure. Ask me anything, as they say. So I think we touched on the Bank of America substantial shareholder notice was linked more to the Delta hedge short borrow that was part of the unsecured note, and then probably their prime broking relationship. So we really probably there's no need to look into that too much as that comes out publicly. The Klarna news featured in Street Talk, which, as we know, is the greatest rumor mill of all. They've had many rumors about us in there that have turned out some to be true and some to be completely not true. And all I will say is that we obviously review our register every couple of weeks, every month, and we can see exactly all shareholders. If a shareholder becomes meaningful, i.e. substantial, they legally have to put out a disclosure once they get about 5%. Because if you're below 5%, it's not really meaningful, it's not really substantial. You can't call a shareholder meeting. You can't have a crack at the board, cause for spill, do all of these things. So I'm just, counsel the community to really look at more substantials. And unless you see a substantial, let's just assume it's business as usual.
Now, Larry, while we're talking rumors, there's obviously a number of rumors out there around a potential US listing. I think, that really went into overdrive after Afterpay and Sezzle have both sort of indicated that they're going to list in the US. Is a US listing on the cards for Zip?
Yeah, so that was in the press a while ago, and we never actually stated that we were doing that. The media sort of again embellished and put that out there. So unlike the peers who have come out and said they are listing on the US, Zip has not said that. So now the question for us though, if we're talking about shareholder value creation, as a board with our advisors, we're always looking at how we maximize value for our shareholders, right? And it could be around access to capital, relative multiples, whether it's revenue multiples, EBITDA multiples. And so what I would say is we're always going to look at it. I'm an ex-investment banker. And so these are things that we talk about all the time, particularly with my chief of strategy, is how do we maximize value for shareholders? Never say never. but there are no immediate plans to drive a US listing. And what about all the retail investors? I mean, like that's if we do, how do we take them on the journey? Because we think we've got a lot further to run. So I wouldn't ever take it off the cards, but if we were to do it, we would have to think seriously about our supporters and how we take them on the journey. And that's a little bit harder to do, not impossible. But we'll always look at all options. Nothing currently on the cards.
So, Larry, before we move to closing comments for our retail investor call here with you, final question from the community is around the digital currency that Zip seem to be entering into. Are you able to shed any more light on that and provide any more information?
Yeah, so some people say the financial diet of the millennial is BNPL, crypto, and fractional shares.
Sounds about right.
Is that right? Yeah. Right. So we only do BNPL. What about the other two, right? So I think BNPL is a great entry product. It's why the banks are looking at it, because you can sign up quickly. It's a great product for customers because it's fee-free, it's interest-free, it's easy. But the question is, how do you drive more lifetime value, LTV? And so the question financial services players like us need to think about is, well, what else should go into the wallet to drive engagement, but also drive long-term value creation? And so when we survey customers, crypto is definitely one of the big items. And for us, how we can give customers a way to pay, save, and invest is really important, but it has to be linked to our mission, right? And our mission is to be the first payment choice everywhere and every day. So we're not just going to be a vault that you put your gold bullion with us and don't use us every day. It must be, okay, this means that my Zip virtual card, my Zip credential is the reason that I'm going to pay every day. So that's how we in our product teams think about what we put into the app, how we drive people opening up the app and sticking very, very closely. So we think crypto is a great space to play. Digital currencies are obviously gaining enormous storm, and the investment coming not just from, you're seeing the big end of town really, really wake up. So it's all, our view is that it is a form factor and currency that is here to stay. And then over time as well, as volatility reduces and it turns less into a crazy investing market, it will become an asset class. So we are looking at it as we are looking at a range of those other features that we can put into the wallet to really drive engagement, and where we have a right to win. Because the other thing is, we can't pretend that we're going to have a better crypto wallet than Coinbase. Yeah, so you got to be really mindful of who are you and how you're going to play. There's no point just replicating someone else's, because that's not our business. Yeah, so we've got to be mindful on how we do that.
So Larry, Jack Dorsey, the Square CEO, has come out and said that Bitcoin adoption would massively accelerate Square's growth plans, just because it's a global digital currency that's the same everywhere. Do you think the same for Zip? Yeah,
so we do believe as a asset commodity class, it is very important. What we are also excited about, although no immediate plans with it yet, is really more is actually the blockchain technology. How can you bring blockchain technology to the payments ledger, and how payments are processed between customer and customer, or customer and merchant, or customer and overseas? And so we think that can actually transform the payments infrastructure, ultimately reduce costs, and create better accountability and kind of governance. I think that is where it can have a huge impact. Obviously, wallets, as more customers, do see. But the problem with Bitcoin is it's too volatile to currently be used as a fiat. It just moves way too. So until it becomes more stable, it's more an investment class. But we do expect these asset classes to become substitutions for currency, which you'll start to see wallets start to adopt en masse. But I think there's still a way to go for the stability to move into those form factors. So I think I'd love to see blockchain completely redesign the Visa and MasterCard networks, right? And kind of almost change the balance of power between payments and the different stakeholders, and put more value into the hands of customers and merchants.
Now, Larry, it's been a fascinating call. We've covered a lot of ground and answered many of the questions from the community, both Equity Mates community and abroad. To close out, I know we've taken a lot of your time. what is your sort of final message to shareholders? What do you want Zip investors and those considering Zip as an investment to leave this call with?
I think first of all, get everyone, tell your friends, tell your family to sign up and use Zip, whether you're a consumer or you're a merchant. We have to get into every checkout, and we need to get to 5 to 10 million active customers over here in Australia. So that's sort of first and foremost, because more of that drives volume. The second is we are really at the beginning of this phenomenon, right? 1.5% of e-commerce is going through buy now, pay later. And that's the current total addressable market. So we're at the beginning of a generational shift that is going to completely disrupt not just retail, but financial services. The big credit card companies are looking at it going, uh-oh, what are we going to do, right? What are we going to do? The average credit card customer in the States is 50. So if you're Citi, if you are Goldman's, who are going to be the 6 largest issuers of the millennial and post-millennial? And that's where we think Zip can play a major role to be one of the global players there. And that journey is literally day one, right? So stick with us. We think we've got a long way to go. And thanks for your support. Share with us. Tell us, if we're doing things right, if we're doing things wrong, if there are new opportunities or things we should consider, because we are listening.
Well, I think from our point of view, this is another great example of speaking to a CEO, and it just reiterates the fact that as shareholders, we often get caught up in the day-to-day movement of share prices, and I guess forget to zoom out and think about the longer term and the fact that management are there also thinking very long term when it comes to building their businesses. So, yeah, we very much appreciate you coming on, Larry, for our first retail investor call. I'm sure we'll have many more, and a huge thanks to everyone in both our community, Equity Mates, and also other forums online who have helped to pull together a bunch of questions that are important to the retail investors in Zip, as well as I said, those who are looking to add it to their portfolio. So great chat, and look forward to catching up at the next earnings.
Awesome. Thanks for having me, guys. Keep well.
Equity Mates Investing Podcast is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Equity Mates Investing Podcast are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website, where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Equity Mates Investing Podcast acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander people today.